And even when it was ranked in the 30s a couple of days prior to that, it could be ranked in the hundreds. It would still be ranked higher than Samsung because you can't invest in Samsung. Well, technically you actually can invest in Samsung, but that's a bit of a story. We'll save that for another video maybe. I don't know if you guys remember this, but this is my Samsung Galaxy Note 5. It made a little special appearance on my last video. Of course, it's a prop phone because my updated Samsung phone is recording this video. But point is, you can actually invest in Samsung. And if you're a Samsung user and an Apple investor like I am, you may be satisfied with your Apple investments, but now you should be excited that you can invest into Samsung. But is it worth it? What's up guys, I'm Darren Jackson. Hopefully you all are having a great day so far. And yes, for all you Samsung users out there or anybody that was concerned about investing in Samsung, I found out you can actually invest into it. And from the video I made previously last Thursday, which by the way, for everybody that watched, thank you so much. And for all the new subscribers I've made, thank you and welcome to the channel. I did a little bit of research on how exactly this investment works. And it is possible, but there's a little bit of a catch. So it comes in the form of an ETF. And that ETF is called the iShares MSCI South Korea Fund. So since Samsung Electronics is a South Korea-based company, it's only available to invest in solely in South Korea. But this ETF is also available in America. So this is the ticket in to invest into Samsung. Finally, it's about time. But in this video, again, I want to answer the question, is it really worth investing into? And that's where this video breakdown comes into play. So of course, guys, we're going to go over the stock details of ticker symbol EWY, price, PE ratio, stuff like that. And then I want to go over not only the pros of the ETF itself, but the cons as well. Because of course, when you invest in any ETF or any company, you want to make sure that the pros outweigh the cons, the ends justify the means. You don't want to make any large sacrifices if you don't necessarily have to. And then after all that, I'll give my personal opinion if I feel like it's worth it. And I haven't rehearsed what my opinion is, so this is gonna be kind of freestyle towards the end. So I'll probably be just as surprised as you guys will be, but we'll figure it out. All right guys, so this ETF made its way into the stock market back in May 9th of 2000. So it is a 20-year-old ETF, it's pretty old. And it tracks large and mid-cap Korean funds, all Korean-based stocks, but a lot of companies that have accessible products in America, again, such as Hyundai and Samsung. Now, this ETF holds 109 different types of companies, and their three biggest sectors are finances, consumer cyclicals, and of course technology. Technology making up about 45% of the 109 holdings that this ETF has. And within technology, its biggest sector is of course Samsung Electronics at 22% of this entire ETF. So being that this ETF was about $66 a share last time I checked, every share you buy into will give you 22% of Samsung. So there you go. So now that we know the general basics about this ETF, let's go into the pros, the benefits of why you should invest into this. Now, besides that, it'll let you invest in Samsung, which honestly, by the way, that's probably the only reason you should be investing into this ETF, because Samsung, the ruler of all phones. Don't at me. But seriously guys, besides that, there are a few pros that should make you lean towards investing into EWY. The first off is the dividend yield. Now it pays, I want to say a little bit above a 2% dividend yield, and considering the current price, that's gonna get you at about $1.30 a year per share. So not too bad. Its PE ratio is pretty low. It's at about a 22, maybe mid 20s. So remember guys, a high PE ratio essentially means that a company could be overvalued, or that the stockholders see this company being worth more than what it currently is for whatever reason. And a low PE ratio could mean that this company is undervalued considering the earnings per share. So if it's increasing in earnings per share growth and it has a low PE ratio, considering if it's an ETF, what it covers, or if it's a stock, what's going on, it may be a company that's sneakily making its way up into the positives. I don't know if sneakily is a word. We're just gonna say sneakily is a word. And another reason you should look into investing into this ETF is because it has consistent growth. Now, growth has been something that starts to become more important to me over the past couple of months, because I hated seeing myself get a lot of dividend checks, but losing money overall doesn't really make sense. So even within the past week, month, couple of months, year, and the past 5 years, it's grown tremendously. So the balance it has within the 109 stocks that it invests into is really beneficial, especially that the majority of those stocks are in the technology sector, which is on the rise and will probably always be on the rise. So those are the reasons why I feel like this company is a pro. But it doesn't mean that it's perfect. It's the cons. One of the cons is that, yes, as I said before, it does have a dividend yield. It does pay $1.30 a year, but it only pays once. Now it's a little weird because if you go on dividend.com, it shows that it pays semi-annually, but if you look at the dates, it'll show like it pays on December 26th of one year and then December 27th the next year. And if my math's correct, that's a whole year. That's not 2 payments within a year. So that's a little weird. What's even worse is that the dividend yield looks like it fluctuates. I say that because, again, there's a lot of growth overall within this ETF, consistent growth, but the actual dividend yield seems like it lowers every other year. So it's not really consistent growth overall. I feel like if it was consistent dividend growth, it wouldn't be much of a difference if you got paid $1.30 per year or you wanted to look at it as monthly payments of 11 cents per month. But that's something you may want to keep a lookout on. It's a little bit suspicious. The next con, and this is just my personal opinion, you may not be a concern to you, is the actual ownership that you would have over Samsung. This is the reason why I'm making this video, and just because I've never heard of this ETF before. But it doesn't allow you to necessarily own one full share of Samsung when you buy one full share of this ETF. And obviously that makes sense, it's an ETF, but considering it's a competitor with Apple, or you may ask some other people, Apple's a direct competitor with Samsung, you expect that company to grow as consistently and have as much potential as Apple, and you can invest in Apple directly. But after I did a little bit of math and a little bit of conversion, because the Samsung stock itself is within Korean won denominations, I believe, the 59,000 wons converts to about $50.90. And the amount of money that you're putting into this ETF that covers 22% of Samsung equates to about $14 that you're actually putting into Samsung directly. That's about 25% of Samsung stock. So that's equivalent of investing in fractional shares, which is a great benefit, especially if you don't have the funds for it. But if you have the funds to invest in one company, would you rather put it in fractional shares or just the whole stock to have all these benefits such as voting, growth, dividends, et cetera, et cetera. So it's a con, kinda, in my opinion. Maybe to some of you guys out there, maybe to the rest of you, it's not that big of a deal, so we'll move on. Now, what is a con, and something I rarely speak upon when I talk about ETFs, is the expense ratio. Think of the expense ratio as a fee that someone on the back end is charging you, because when you invest in individual stocks, you're probably doing the research, hopefully you're doing the research before you make a decision to purchase a fractional share or a whole share of a specific company, such as Apple. But with ETFs, the research has already been done, the analysis has already been done, and based off the category of the ETF, the sector it covers, someone in the back end is doing all that computing and creating this ETF. So all you have to do is just invest into it. So they're gonna charge you that fee for it. Now, this expense ratio is at 0.59%, which essentially means that for every $10,000 that you invest into EWY, you're getting charged $59 a year. Now, in hindsight, that doesn't seem like a lot. You put $10,000 on the table, you leave, you come back, somebody had already taken $59, you probably won't notice. But considering if you compare it to other ETFs that pay a pretty low expense ratio and may be more reliable than this one, that's pretty high. And on top of that, if you were to invest $10,000 into this ETF, you're making about $196 per year in dividends, but you're having to spend $56 of that onto this expense ratio. And that's if the dividend yield is on a high note. Remember how I also said that based off the recent history, it alternates. It looks like every other year it's half of what it once was. So one year you may be spending 25% of your dividend earns on the expense ratio, and the next year you're spending 50%. It's not really something I'm crazy about. Now, the fourth con as well is something called the ESG. And I never really did a lot of research on the ESG when it comes to stocks or ETFs, but while I was researching this topic, I actually saw that Andre Jig dropped a video yesterday from when I'm actually making this video. I love watching Andre Jig videos, but that's neither here nor there. The point is, he covered this topic and how important the ESG is when it comes to specific companies. So the ESG is important because you want to know if the company is looking to do things beyond just making a profit? Are they environmentally conscious? Are they wanting to do things to like make a cleaner earth, such as companies such as Tesla and Hyliion, which is on the rise? And that's another topic that I've discussed previously. How social is a company? How do they treat their employees? Do they pay them well? Do they offer pay increases, bonuses, PTO, vacation? How happy are the employees that work for these particular companies? And the governance. What do they use their money for? Well, I guess the better question is, what are their goals? How do they approach certain things? Are they looking for the short-term goals to make a quick buck, maybe? Or are they looking for the long-term goals to maybe make a benefit to the entire world? And I would definitely watch his video if you want some specific details on how the grading scale works, but long story short, this ETF received a grading scale of BB. Consider that the low of the average. Remember when you were in college and people said C's get degrees? I would know because I was one of them. This company got that degree barely. So it got a 4 out of 10 rating on the ESG scale, which means it's not a horrible stock when it comes to ESG, but they may just be looking into making money, whatever that means. It could be worse. So those are the pros and the cons of this ETF. And again, this is me freestyling my personal opinion. Guys, I love Samsung. We already know that. Watch my last video if you want a reminder of how much I love Samsung. But would I invest into this ETF? No, I can't. My bottom line is to have a stock portfolio that not only has consistent growth, which this does, but dividends, which kind of doesn't. On top of that, even though I don't invest a lot because I'm not rich, the fact that this ETF charges a 0.59% expense ratio, especially considering its dividend yield is alternating for the past 5 or 10 years, I'm not too crazy about having to lose that much money every single year considering how big my portfolio is overall. And the fact that I'm not contributing so much to each share of a Samsung stock. I would have to invest in this company 4 times essentially to invest in Samsung once. So I'm not really a big fan of this ETF, but I am gonna keep a lookout for it because it is very interesting and it does have Samsung. It is your only way, at least from my understanding, your only way to invest in the Samsung. So it's definitely something to keep a lookout for, especially if you're a big fan. So we'll just have to wait and see. But until then, make sure you guys watch some of these other videos. Hopefully they help you in your investing journey as they have in mine. That's if you've made it this far into the video. And if you have, thank you guys so much for watching this video. I've grown so much in the past couple of days. I just want to say thank you so much for everyone that was already subscribed to me. And if you subscribed to me just recently, welcome to the channel. Hopefully I bring you the content that you enjoy. Leave comments down below of anything that you want to comment on when it comes to this video, whether you agree or disagree, or you have any suggestions on future topics that you would like me to make. I'm always all ears. I love communicating with you guys. So I appreciate you watching this video, and until next time, take care.